the only Sardar at that time, a junior high school. I was only 13, so 1983 is when the family moved to the US.
Wow.
And we moved to South Central Los Angeles, which in the early 80s was not the best of places. There was a lot of gang warfare, and Dad struggled to find a job because of his pagdi, dadi. Being a Gursikh was actually a big challenge. He had a couple of offers, one of them from the US Postal Service, where basically the hiring manager said, "You are brilliant, you've passed all the tests, but you need to be clean shaven." Junior high school. Mostly African American, lots of gang members and so on. They didn't understand who I was. I couldn't understand what they were saying. Then I end up at a school which actually had a daycare center on campus. So imagine this, going to a high school
So
with
the rate was so high.
13, 14 infants. And then of course, several pregnant girls, young women. And so the graduation rate was very low, among the lowest in the state. Nobody in the history of the school, in 35 years at that time, had ever applied to MIT. And I still remember one of my professors, I won't name his name, I went to him and I said, "Mr. XYZ, I need a recommendation letter. I'm applying to MIT. And he looked at me and he said, "Son, why are you going to a military academy?" He did not know what MIT was. Ended up at MIT, studied aerospace, shot off rockets in the middle of the Mojave Desert as part of my master's program. Then worked for 4 years in defense, building spy cameras for the US military.
Wow.
Believe it or
Interesting.
not. Was part of the team that fixed the Hubble telescope back in the mid-90s. Took a break, went to UCLA to get my MBA. After that, ended up at Mattel. And then eventually, in early 99, got called to join a small boutique investment bank called Garage.com, which was founded by a legend in Silicon Valley, initially helping companies raise money. That's the business of investment banking. And then after the dot-com bubble burst, we pivoted into a seed stage venture capital firm. So I am an accidental venture capitalist.
Hello everyone, welcome to the Rising Immigrant Show. I'm your host Jasmine Kaur, and today we are here for yet another episode of the Rising Immigrant Show. I have with you Mohanjit Singh Jolly. He is an MIT graduate. He worked at Mattel and he is now a partner at Iron Pillar, a venture capital fund. Before giving you more information, let's dive right into this conversation and learn what he does and try to see if we can get his 2 cents on life, on business, on venture capital. So allow me to welcome Mohanjit Singh. Welcome to the show.
Thank you, Jasmine. It's a pleasure being here. Yes. Thank you.
I'm so glad you're here in our studio today. I know you're here in New York only for a few days. So thank you so much for coming all the way and talking to me.
My pleasure.
So let's start with your childhood. Where did you grow up? Where were you born? When did you move to the United States?
So I was born in 1969 in Ludhiana. CMC Hospital.
Same city as me.
Really?
I'm from Ludhiana too.
All right.
Yeah.
All right. Nanke, dadke, I mean, both sides of the family were in Ludhiana. That's where parents met. But in 71, moved to Delhi. And so I grew up in Delhi, but I was only 13. So 1983 is when the family moved to the US.
Wow.
And we moved to South Central Los Angeles, which in the early 80s was not the best of places. There was a lot of gang warfare and things like that. And not the best time to be in the US. It was a high recession. Dad struggled to find a job because of his pagdi, dadi. Being a Gursikh was actually a big challenge to get going in the so-called promised land. Anyway, I did my high schooling in LA, then ended up at MIT. I was there for 6 years, did a bachelor's and master's in aerospace. My dad used to work for Indian Airlines back in India, at what used to be called Palam Airport in Delhi. And so I was fascinated with aircraft and rockets. I said, okay, that is the piece that I'm going to study and eventually, hopefully, work for NASA or Boeing. Anyway, did MIT for 6 years, studied aerospace, shot off rockets in the middle of the Mojave Desert as part of my master's program. then worked for 4 years in defense, building spy cameras for the U.S. military.
Wow.
Believe it or
Interesting.
not. Was part of the team that fixed the Hubble telescope back in the mid-90s. Took a break, went to UCLA to get my MBA. After that, ended up at Mattel. And then eventually, in early 99, got called to join a small boutique investment bank called Garage.com, which was founded by a legend in Silicon Valley named Guy Kawasaki.
Yeah.
So he's a known entity. He said, stop playing with Barbie dolls in LA. Come to Silicon Valley. This is where things are happening. So I joined him at Garage. And then, I was with him for 8 years. That's how I got into the startup business, initially helping companies raise money. That's the business of investment banking. And then after the dot-com bubble burst, we pivoted into a seed stage venture capital firm. So I am an accidental venture capitalist. Started investing in startups in 2002, 2003. So now it's been over 20 years. Hard to believe.
What an incredible journey.
Yes,
I
and then
think
I've been
I'm
doing
going
it
to
ever
take a minute
since.
to wrap my head around like all you've done. It's a lot. I'm going to go back to your childhood. You said you moved to the US when you were 13 years old.
That's right.
Did you adorn a patka at the time?
Of course. And,
how was that transition for you?
Difficult. So think about, if possible, early 80s. The Sikh community is not as robust, of course, as it is today. I am in South Central Los Angeles. I'm the only Sardar at that time, a junior high school, mostly African American, lots of gang members and so on. They didn't understand who I was. I couldn't understand what they were saying, right? So I studied Queen's English at Guru Har Krishan Public School, Vasant Vihar, Delhi, right? I am sort of fresh off the boat, so to speak. I end up at this junior high school, and the kids are speaking what I learned was slang, and just trying to communicate. And I was really struggling. I said, I think they're speaking English, but I'm not understanding it. Anyway, so those are some of the transitions. And then the other that was a bit of a shock to me is there were two major gangs in South Central Los Angeles at the time. They were called the Bloods and the Crips. And the colors of those two gangs were blue and red. And so blue and red were the patkas that my brother and I wore. And so at different times, different gang members, either at knife point or once showing a gun, and I wasn't sure if it was a real gun or a fake gun, but regardless, they thought that I was part of the other gang. And then I still remember my advisor, Richard Alpert. I will never forget his name. He said, son, I don't care what you do, but do not wear blues, do not wear reds. Go with white, black, tie-dye, wear a cap, something, because you never know.
Don't wear those colors.
Do not wear those colors. But here's the interesting bit. In India, I mean, given where I came from, Guru Har Krishan Public School, Vasant Vihar, to where I ended up, Marina Del Rey Junior High School in sort of South Central LA, the delta in terms of math and science or studies was about 3 or 4 years. So I was 3 to 4 years ahead of these kids. So one thing I realized is I said, okay, why don't I become friends with these guys so they don't feel, they shouldn't feel threatened to begin with.
Right.
But why don't I...
You were a new kid.
Why don't I create a bit of a rapport, create friendships? So I actually became friends with both sides. And I would hold...
Oh my God, that's scary though.
Office hours. Yeah, I basically decided, I can teach these kids some math and science after school. Wow. And so after school, I would teach some of these kids. So Mondays and Wednesdays was one group, Tuesday, Thursday was another. And amazingly enough, that brought me closer to both sides. So instead of threatening me, they would come up to me, or whoever the older kids were in the crew. They basically said, look, if anyone threatens you, let us know and we'll protect you.
Wow.
So it came sort of full circle, which was really, really interesting. But again, I was only at that school for a little while. And then Mom, who was a nurse all her life for decades, although she really struggled. So Dad, for example, just zooming out a little bit, Dad could not find a job because he had a pagdi, he had a dadi, and he had a couple of offers, one of them from the U.S. Postal Service, where basically the hiring manager said, you are brilliant, you've passed all the tests, but you need to be clean shaven. And Dad said, that's not going to happen, right? And so even though we had reasonable jobs, we were not wealthy by any means. We were sort of, I would say, lower middle class in India, maybe middle class. Dad worked at Indian Airlines, Mom was a nurse. But coming to the U.S., Mom had to start as a nurse's aide, right?
Sure.
Minimum wage, $3.35 an hour. I'll never forget that. She ended up doing, 16-hour jobs, 7 days a week. Typical immigrant story.
Sure.
Dad was struggling to find any job. Finally, he did a travel agency thing, eventually became a clerk at Bank of America, and then stayed at BFA for 25 years and rose through the ranks, eventually becoming a loan officer. So again, I'm weaving in a bunch of different things, but personally a struggle in terms of the transition from India to LA. I ended up at a high school that had the highest teenage pregnancy rate in California. So think about this, right? Here's a very protected child coming to this supposedly promised land. And first, the gang issues. Then I end up at a school which actually had a daycare center on campus. So imagine this, going to a high school
So
with
the rate was so high.
13, 14 infants. And then, of course, several pregnant girls, young women. And so the graduation rate was very low, among the lowest in the state. Nobody in the history of the school, in 35 years at that time, had ever applied to MIT, much less sort of gotten in. And I still remember one of my professors, I won't name his name, but he was my teachers. I went to him and I said, Mr. XYZ, I need a recommendation letter. I'm applying to MIT. And he looked at me and he said, son, why are you going to a military academy? He did not know what MIT was, right? So that sort of gives you an idea of what kind of school. So no calculus, no honors physics. I was ill prepared. So from there, somehow, I still don't know how, I somehow end up at MIT.
What gave you the courage to think about MIT in the first place? Coming from India and not having any sort of background and going to a school like the one you just mentioned.
So look, I mean, parents themselves were struggling, as many, sort of immigrant parents do. And so they had no idea about colleges in the U.S. and all that. But because I was interested in aerospace, I would spend time at the whatever small, college center was at Santa Fe High School, and the guidance counselor there encouraged me. So that's the one piece that I do want to weave into our conversation is along the way, whether it was Richard Alpert in my junior high, there was actually a wonderful teacher at Santa Fe High School, Miss Traub, Betty Traub. She handwrote a 4-letter recommendation, a 4-page letter of recommendation for MIT. In return, the dean of admission from MIT handwrote a 2-page response saying, thank you for taking time for doing this. But to go back to your question, the reason is I was fascinated with aircraft. I was building model aircraft even when I was in India. I said, this is what I want to do. This is my aspiration. So why not go for, nowadays they'll call it a reach school, right? My chances, I thought, were somewhere between slim and none, right? And so when I got the letter, it used to come in regular envelopes, not the big folder, obviously not online anymore. But I still remember it was sort of March 14th, because it's MIT calls it Pi Day, 3.14. So March 14th is when you received the letter. And because it was a thicker envelope, I felt like, okay, this is a good sign. And then I ended up there, but again, I struggled. I struggled there because I was not prepared. But again, I had support. And so there were friends, I was in a fraternity, there were a couple of my so-called fraternity brothers who said, don't worry, we have your back. And so that is something I am incredibly grateful for throughout my journey. And that's something that I and the rest of the family sort of have woven into our DNA, is to just pay it forward because others had helped us. it's our obligation to continue to help others.
No, absolutely. It's so beautiful how some people come in our lives and just, help us sail through.
Correct. And often when you least expect it.
Right.
It's a lot of it is just happenstance, luck, serendipity, whatever you want to call it.
So how did you make the switch from MIT to working at Mattel?
So the MIT to Mattel journey is, as an aerospace guy, even from a place like MIT, you are not immune to perhaps a little bit of what's going on in the U.S. today, but you're not immune to who's in the White House. Okay,
Sure.
So the aerospace industry back in the 90s would be either have tailwinds or have headwinds, depending on whether the Republicans or the Democrats were in power. Right? When it's Republicans, defense budgets go up, aerospace hiring increases. When Democrats are in power,
Interesting.
it retreats. And so it was incredibly difficult to find a job. 91 is when I finished my bachelor's, and I did get offers. I got an offer from NASA and Boeing, which are two of my, aspirational sort of employers. I still remember the NASA offer was $22,000 a year, and the Boeing offer was $25,500 a year. And then my professor at the time, he said, "Son, why don't you do this? Why don't I give you a fellowship and you do a master's in space propulsion?" And basically the stipend was close to what NASA and Boeing were offering anyway. So I ended up staying, got my master's. The only job that was available, I mean, usually you'd have multiple offers, but in this case, in 93, I joined a company called iTech Optical Systems. iTech was actually founded in the 60s by a couple of Boston University professors to spy on the Sputnik when the Russians launched the satellite. But they were the masters at what are called high-resolution reconnaissance systems, spy cameras, for the U.S. military. And I was the youngest hire, so they hadn't hired anyone in the last 5 years. So I was the youngest person there, stayed there for about 4 years. But again, I realized when I was there, when I joined, there were 400 people. When I left, there were 110. So every 6 months, they would have layoffs. And I said, I need to control my own destiny. Right. I cannot be, prone to the whims and fancies of whoever's in the administration, et cetera, et cetera. So I took a break. I said, I want to go from an engineer to having some business acumen. So that's when I decided to go to UCLA. I'd been away from mom and dad, the family, for 10 years. And it was also a pull to go back closer to the family and LA, and that's what I did. And while I was there, so again, 2 years, and at the end of it, I said, you know what, I'm not a big company guy.
Sure.
I need to find either a startup or a smaller enterprise. But again, this is when lightning struck. And one of my classmates at the time, Rob, and he said, Mohanjit, have you thought about Mattel? I said, what do you mean Mattel? Barbies, Hot Wheels, it's a large company. I don't want to, be at Mattel. He said, no. There's a small group of MIT graduates. It's almost like a skunk works within Mattel. Why don't you just go and have a conversation with them? Wow. So I reached out. I talked to a gentleman named Doug Glenn. Doug was the chief strategy officer at Mattel. He was MIT class of the late 60s. Anyway, he and I hit it off. He said, look, yes, Mattel is a large company, but we are a 4-person shop within Mattel, and our charter is go travel the world and find technologies that could be embedded in toys of the future.
So interesting. Wow.
So it's like an entrepreneur or what's called intrapreneur, right, within a large organization. So you're not,
limited to what
limited
you're
to
doing.
Exactly.
But you expand your horizon. You go out there and look for new technologies that can be embedded in toys.
Exactly. And through that, I actually got a chance to meet Andy Grove, who used to be CEO of Intel. Our group ended up doing a joint venture with Intel called Intel Play. So people don't realize Intel actually got into the toy business in the late 70s. So we came up with the creative designs, they came up with the execution and some of the manufacturing and so on, and we launched a new brand called Intel Play. So it was a phenomenal journey, but all started by me running into this gentleman, Rob Vassell, in the cafe at UCLA, and he said, why don't you think of Mattel? Because it was not something that was in my mind, and then one thing led to another. And this gentleman, Doug, and I We met in 1997. He and I are still friends. He's now an investor in my fund.
Nice.
And I'm in Hong Kong in 2 weeks, and I'm going to see him there. So relationships matter
Right.
in this entire journey called life. And if you have an authentic bond, it doesn't mean that you have to see that person every day, every week, every month, or even every year. But if you have that authentic relationship, it doesn't matter if you pick up the phone and call somebody. You know, I just had lunch last weekend with a gentleman who was my manager during a summer internship in 1997. He is now the CEO of a company called Epson America. They make printers, projectors, and things like that. Keith Kratzberg is his name. I had not seen him in 25 years. And we had lunch together, and it was as if we had stayed in touch throughout.
That's
right?
beautiful.
So those are things that, to me, at my core, bring me joy. Right? And again, I've just been very, very fortunate to have met some really phenomenal people who either intentionally or in some cases accidentally have changed my trajectory in life. Yeah.
And you said that you got a call for Garage. Once you joined Garage, you slowly made your way into Iron Pillar.
That's correct.
Talk to me about that transition.
So there were 2 steps there. So Garage happened because Guy Kawasaki cold called me because, very interesting story. So one of my classmates from UCLA, her name is Barbara. Barbara became pen pals with Guy.
Oh.
When pen pals were a thing. People actually used to write, believe it or not. So she would write to Guy, Guy would write back to her. And so Barbara joined Guy's firm called Garage.com right out of business school. I went to Mattel, she went to Garage. And then as Guy was thinking about growing the firm, she mentioned my name. Again, connection. She said, give Mohanjit a call. He is currently at Mattel, but I have a feeling he's a techie guy and he'll want to come to Silicon Valley. So Guy calls me. He said, do you know who I am? I said, no, I actually didn't know who Guy was. And he was shocked. He's like, no, you don't know who I am. I said, no. Anyway, he's a prolific speaker, author, all those sorts of things. But he convinced me to come to Silicon Valley. And so I joined him. I was with him for 8 years. Now, interestingly enough, when we started investing, we were what are called seed stage investors.
Okay.
Seed stage means when companies are just getting started. They need... At that time, they needed $500,000, maybe $1 million. And we would write checks of $250K to $500K to get companies going. What we realized was every one of our companies was doing business with the Indian IT services companies. So we would invest in software companies in Silicon Valley.
And they were doing business
business with Infosys, TCS, Wipro, et cetera, et cetera. So when it was time to raise Garage's second fund, first fund was very small, $20 million. Next fund was supposed to be $75 million. I convinced Guy and our other partner, Bill, there were 3 of us. I said, let me go to India. All of our companies are sending business to India.
Sure.
Let me go and talk to the Infosys and Wipro and TCS and see if they may be willing to invest in Garage's second fund. Okay? That's how it works. There are entities called limited partners who give VCs capital. VCs then give capital to entrepreneurs. So that's the cascading effect. But I went to India. It was too early. So nobody was interested in investing in this small firm sitting in Silicon Valley. But people found out that I was in India, and they invited me to come and give a keynote at the Indian School of Business in Hyderabad. ISB has this annual event called ISB Connect. They do it with Thai. Anyway, I go and speak. They asked me to judge a business plan competition. Lightning hits a 3rd time. I'm sitting on that business plan panel, and sitting next to me is a gentleman named Raj Atluru. Raj and I had known, so he's from Silicon Valley. He's from a firm called DFJ, Draper Fisher Jurvetson. I said, what the hell are you doing sitting in Hyderabad? And he said, well, Tim Draper, who's the founder of this firm called DFJ, and I have been investing in India for the past several years. But we're tourist VCs. We come, we make an investment, we go back to the US. Now we have a large fund, and we want to set up an India operations, and we need a partner. Do you know of anyone? I said,
raise your hand.
I said, Mahuna. Right? I'm just, why don't you think of me? And it was one of those spur of the moment decisions. In venture capital or finance, it's called option value. Option value is, Tika, if it works out, it's all great. If it doesn't, you're no worse off than you were to begin with. And so that accidental, meeting or conversation led to the family actually moving to India in 2007.
Got it.
So kids were 6, 4, and 1.5 at the time. And my wife and I, we said, if we're going to do something this crazy, now is the time to do it.
Got it.
Before the kids get older and you get
Right.
stuck in,
It's much harder.
the schools and so on and so forth. So yeah, between 2007 and 2012, we were in India.
Oh, I did not know that.
And made a bunch of investments, managed legacy DFJ investments, and that was a heck of a journey. That's a whole separate podcast and episode all by itself. But just to fast forward, we moved back in 2012 for a variety of reasons. And then I was sort of thinking and introspecting, saying, do I want to reinvent myself as a Silicon Valley individual, or do I want to follow my heart in the U.S.-India corridor? And I was leaning towards the latter.
Got it.
That's when lightning struck yet again. I happened to be in Bangalore during my regular trips to manage our investments. And at that time, my now co-founder, a gentleman named Anand Prasanna, reached out to me. Again, he found out somehow. I mean, it's incredible how these networks work. But he found out I was in Bangalore. He reached out. He said, I want to come and spend a day with you and pitch you an idea. And the idea was Iron Pillar. This was early 2015. I had met him. I didn't know him. I said, the best of times and the worst of times I've had in my life are due to people, right? Personally and professionally.
Right.
So let's date. Let's get to know each other.
Got it.
And, do we have complements? Do we have fundamental sort of foundational values, things like that? And so it was a wonderful dating period. We got to know each other really well. I respect him tremendously. And we launched Iron Pillar. We pulled a team together and we launched Iron Pillar January of 2016. So 9.5-year journey.
Wow, incredible journey. For so many of us, we don't really know what you do. What do venture capitalists really do?
Sometimes we don't even know what we do. My mom till this day doesn't have any idea what I do. So look, simplest way to describe what venture capital is, really think about it as a co-founding capital provider. What I mean by that is venture capital has different stages. Okay, there's something called early stage, mid-stage, growth stage, and then private equity. That's the trajectory or the arc of a company's journey and even the capital provider's journey. At the earliest stage, so if I go back to my garage days when you're writing 250 to 500K checks, that's when you're just getting going. I mean, the companies are just formed. They don't even have...
So the early stage of the companies you're investing in.
So that's where I started my career.
Okay,
so I'll take you through that. So Garage was an early stage firm. So again, when companies are just getting going, they want to raise $1 million.
So you're trying to say that there's different type of venture capitalist firms as well. Okay.
That's correct. That's correct. So companies need capital throughout their journey.
Got it.
Okay. And there are different sets of investors who are specialists in many cases by stage. So that's why the early stage investors write smaller checks. They take a much higher risk.
So does that depend on the capital you have, the fund?
Yes.
Okay.
Yes.
Or does it depend on your skill or strategy level?
It's a combination.
Okay.
It's a combination of the two, right? So you have to have the right strategy. So for example, if you're an early stage investor, so Garage, for example, we had $20 million, right? And when you're an early stage investor, you know that you have high risk because companies are just getting started.
Got it.
As a result,
and you never know if they're going to make it or not.
That's right. It's called mortality. So the earlier you invest, the higher the mortality rate, meaning because you just
your
don't
risk
know.
Is higher.
Risk is much higher. And your expectation of reward, therefore, is much higher, right? So valuations are lower, you own more of the companies, but therefore, because the risk is high and the mortality rate is high, you have to have a large enough portfolio so that your chances of, let's say, 2 or 3 out of the 20 investments becoming very successful to provide the returns that you need. Right? So that's
the risk is higher, so you invest in more companies so you can reduce your overall risk.
That's correct. That's correct. Usually at the early stage, the rule may be either 90-10 or 80-20. What I mean by that is either 10 or 20% of your overall investments will actually provide the returns for the entire fund. Okay? Meaning, let's say if you have a portfolio of 20 companies, it may be 3 or 4 of those companies that are going to be big winners. 10 times, 15 times, 20 times your invested capital. You invest $1 million, they return 10 million, 15 million, et cetera. The remaining sort of, call it 80%, half of them may not make it. And the other remaining, 40% may just return your capital or less.
Right.
Got it. So that's the early stage snapshot of the portfolio. Now, as you go further in, so with DFJ, for example, my second stint as an investor, they were a Series A investor. Series A typically means there is some level of product and product market fit. You have some early customers. You have early signs that, what you're building, somebody's willing to buy and pay for. You're not profitable. You're still losing money, but you've gone beyond the earliest stage, or sometimes called seed stage, where it's purely idea. From idea, you need to go to prototype. From prototype, you need to go to product. From product, you need to go to sales.
Got it.
And once you have some sales, that's when someone like a DFJ would come in.
Got it.
We would write, $5, $6, $7, $8 million checks, because these are larger funds.
There's proof of concept.
There's proof
of
beyond.
They've proven that,
right.
there's a product market fit.
That's right.
And then they're able to sell it.
That's correct.
So you invest in that versus the initial vision, which many early sort of, you said, venture capital funds invest in.
That's correct.
Got it.
So the fundamental, it doesn't matter where on the spectrum you are, there are what I call the 4 pillars that investors use to make the investment decision. This is a framework, I learned back in garage days. It's still valid today. I call it the 3 T's and the M. The 3 T's and the M are team, technology, traction, and market. Okay? Team first and foremost. No matter where you are on that spectrum, you are making an investment in the person or persons. It could be the entrepreneurs, the founders early on. Maybe there's some professional management that comes in later on. And it's a belief that there is execution capability on the part of the team. So team is first and foremost. Now, when you're just getting going, you may not even have technology. You definitely don't have any traction in terms of customers. So it's really a bet on the team and a large market, the T and the M. But as you make progress, you get some technology. Technology is basically a proxy for differentiation, some IP, some sort of a...
What differentiates them from the rest of the people out there trying to do something similar?
That's right. That's right. And traction, of course, is traction ideally, known customers paying you a lot of money on a recurring basis, things of that nature. That's really the definition of traction. But early on, it's purely just team and market. And then slowly, steadily, you check the other boxes. And then by the time, so DFJ, again, Series A. So what Iron Pillar does is we are actually growth stage investors. So growth stage is the next sort of version.
Series A.
Correct.
And then growth stage.
Correct. Yeah. I mean, there's a whole sort of alphabet soup. There's, Series A, B, C, D, etc.
Got it.
If you were just to sort of bucket it into, seed, venture, and then growth are sort of the 3 buckets. And then there's private equity, which is a different animal altogether. But in terms of growth, what we look for are companies that have already scaled a little bit, meaning that they are north of they're somewhere in the 10 to 20 million in annual revenue. Okay. And they're approaching sort of what's called EBITDA profitability, or maybe even net income profitability. So they're approaching that. But what they really need is partners who can actually roll up their sleeves and help them get from, let's say, 10 to 15 million to 150 to 200 million. That's the journey that we take these companies on. And our thesis is we invest in companies that are building from India for the world. So these are Indian entrepreneurs who are thinking, who again have these aspirations of being global, tech or tech-led companies, and that's where we shine.
Got it.
And so we roll up our sleeves, we get involved, we open doors in terms of business development, talent, and then downstream capital, and eventually either take these companies public, have a meaningful M&A, or sell it to the private equity, very, very large funds, who then take them from, let's say, 150 to 200 million to $1 billion and beyond. So that is the journey.
Trajectory. Got it.
Of a company. I mean, very few actually make it to that very end, because the funnel, gets chopped. And so I have the utmost regard for entrepreneurs, by the way. And that's why I love doing what I do, because I learn something new every single day, and I'm a better human being as a result every single day. because entrepreneurs are a different species. They know when they start out that the odds are against them, right? They know there's high mortality rate. There are very few that actually make it from beginning to a phenomenal outcome. But despite that, they say, you know what?
I'm going to do it anyway.
I have the conviction. I see the opportunity. I'm going to, run like crazy and try my very best to make it happen.
Got it. So what differentiates a good entrepreneur from a bad entrepreneur?
I don't want to say bad and entrepreneur in the same sentence, right?
Right.
Entrepreneur, again, I just have the utmost respect. Now, the biggest pet peeve of mine is a notion that I call being self-aware. Being self-aware, I mean, it's true for any human being, but especially entrepreneurs. You have to know what you know, and you have to know what you don't know, right? Where are the gaps?
Got it.
And now everybody wants to be a Mark Zuckerberg, and I used to say Elon Musk, but it's you want to be there at the beginning and then, be CEO of a $1 trillion, public company. But there are very, 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 very few that actually make it that far. So what you have to realize is, okay, are you an outward-facing entrepreneur? Meaning, are you really good at storytelling, sales, marketing, or are you more of a Steve Wozniak rather than a Steve Jobs, right? Jobs was incredible at evangelizing, right? Wozniak was the tech guru, right? And so on and so forth. You usually see this sort of duopoly of sorts. There's somebody who's front-facing, somebody who's really good at sort of tech and product. That's the world I live in. But you have to be self-aware. And so you have to know when, there's a gap, and you actually want to fill that gap with somebody who's much better than you yourself are.
So you're saying knowing what you're good at
Yes.
and what you're not good at, and trying to fill that gap and getting on people to help you with aspects of the business that you're not good at.
That's correct.
That makes a good entrepreneur.
That's correct.
Okay.
That's correct. And to think in very simple frameworks, there are people who are really good at, let's say, what's called a 0 to 1 journey. 0 to 1 journey is ideation to maybe a proof of concept.
Got it.
Or early customers. Then there are those who are really good at 1 to 10, right? So scaling at least initially, figuring out a little bit of the go-to-market, some level of experimentation, and then there are other sort of professional managers who are really good at either 10 to 100 or 10 to 1,000.
Got it.
And so when do you bring in the right folks
To help you go from that 10 to 100.
That's right. To make that happen. And understanding that there are different skill sets. Just like from an investor standpoint, there are different investors who have different, again, DNA, skill sets, networks at different stages of a company. Similarly, as a company grows, often, right? And I would say most often, you need a different set of folks, right? And when you're just getting started, you are doing everything.
Right.
Right? When more structure needs to come into place, more processes, systems, rigor, maybe some would say some level of bureaucracy, you need to bring in
People who can help that.
Exactly.
Okay.
Both from a capital standpoint, those who have, again, the networks and the experience and expertise, as well as, of course, employees and professional management and CXOs and so on.
No, that's amazing. You invest in so many different companies. You said 90% of them fail. Is that right?
That's right. If you look at from launching a company to how many actually get to a promised land, yes, along the way, well over 90% will fail.
It. What makes a good, successful company a success? And on the flip side, if you've invested in a company that you thought was going to have a positive outcome but didn't, can you share some examples from both sides?
Absolutely. I mean, what's amazing is, there's an art and science both to building a company and also to investing. Okay, what I mean by that on the investing side is when you're starting investing early on, it's more art than science. Science is basically saying you just don't have enough data. You don't have enough proof points. So it's a lot of gut feel. It's a lot of pattern recognition and things of that nature. Similarly, on the entrepreneur side, it's the visionary, the evangelist, and then the execution specialist, right? So that's the blend that you need to have. So I've been on boards where companies that were supposed to be $1 billion plus enterprise value company that actually went to zero. I've also been on boards of companies that were supposed to fail, but rose to become very large enterprises. And part of that is skill and being able to pivot, being able to evangelize your troops when the odds are against you. So I'll give you a specific example. I mean, COVID is probably the biggest example in the past few years. One of our companies, which is now going to be a phenomenal outcome across multiple funds, is a company called Servify. Okay, Servify does extended warranty management for phones and laptops and so on across the world. It's a Bombay-based company, but now has presence in over 40 countries and very large footprint. They've had multiple near-death experiences, and not the least of which was COVID. And amazingly, Sri had such conviction. He had to let people go, right? So first things first, you have to survive to then be able to thrive, right?
Sure.
And so he made some very difficult decisions. Now, in those instances, that's what also makes a difference between a good entrepreneur and a great entrepreneur. How, despite the headwinds and despite letting a big chunk of your company go, can you motivate the go-forward team to work twice as hard? And that's precisely what he did. And he said, look, all the senior leadership will go without salary for as long as needed. But I will make sure that whether I need to borrow, whether I need to, call my family, whatever I need to do,
but the team
I will go ahead and they will get their due. I may need to have other sort of mid-management make additional sacrifices. They did, because he was able to convince them to believe in the fundamental vision, right? Because what was COVID? COVID wasn't. Was a black swan event. It was something completely unexpected.
And nobody knew how to deal with it, right?
Nobody knew how to deal with it. But if you fundamentally believed in your core business and the fact that it was not a matter of, if, it was really a matter of when things were going to come back, right? People were going to buy devices. People were going to buy extended warranty, et cetera, et cetera. So how do you go through that sort of valley of death, right? And the great entrepreneurs were able to do that.
How do you act when there's adversity?
Absolutely. Absolutely. How do you, people fundamentally believe there is finite output that is available from your team. What these entrepreneurs have actually taught me is it's not finite. I'm not saying it's infinite, but it's definitely more than you thought people were capable of.
Got it.
Right? You can usually do more with less, even though you don't think that's the case. And so several of our founders, and again, luck plays a role in all of this, but we've been very fortunate to have what I call these forces of nature type entrepreneurs who just come what may.
Go against the odds and make it happen.
They just make it happen. They just make it happen. Now, you do need a little bit of luck as well, but you make it happen. Now, talking about luck, you can also have bad luck. Okay, so I'll be very honest. One of my investments during my old DFJ days was a company in India called ClearTrip. Okay, ClearTrip was a brilliant sort of travel website, and
I think I've heard of them.
Yeah, so I became a user and a very sort of passionate user of that particular application before I became an investor. And in that particular case, unfortunately, COVID did hit, and basically, travel itself is a fairly thin margin business, and in that particular case, as much as Stuart, the CEO, did his very best, but eventually we ended up having to sell the company to Flipkart and so on. But again, there are certain businesses where you may not have the levers to be able to, and Stuart, a lot to his credit, he had gone through similar sort of ups and downs, maybe not as deep as COVID when it comes to travel, but previously, he had to let 35% of the team go, but he was able to motivate and get people through. And the company was around for a long period of time. It's just, sometimes things happen that are outside of your control.
Right.
So,
right.
and that's what, as an investor, one of the things that I've had to learn, it didn't come to me naturally,
Sure.
is you don't get highly euphoric when things go up and to the right. When companies are doing well, you don't start celebrating, sort of prematurely. At the same time, you don't panic when things go sideways. You sort of say, okay, it is what it is. What can we do, right? In my life, I have this, again, I like these sort of frameworks. I call it the what, the so what, and the now what framework, right? So what has happened? What is the result of something like that, the so what?
Sure.
And then you fairly quickly have to go to the now what. What are the options? What can we do, right? And it's that so what to now what that makes a difference basically between both a good or great entrepreneur and a great investor. Oftentimes, investors, our approach is we love all our children equally, and we have a very concentrated portfolio. We only invest in 8 companies per fund. Remember when I was telling you
have more than 20 companies.
20, 30, 40 companies at the early stage. You want to diversify that risk. In our case, we actually follow these companies from the time they've been seeded or they've done a Series A, and then by the time they get to us in our investment, we've known them for a couple of years. So at that time, it's not a transaction. It's more a relationship, and it's a milestone along that relationship building, right? So we know these entrepreneurs, and therefore we can reduce the risk. We can't eliminate the risk, but we can reduce the risk. But when these companies run into hiccups, they may run into capital needs, they may run into some sort of market force, tariffs, et cetera, we sort of roll up our sleeves and say, okay, what are the options we have? And let's proactively help you get through this hiccup, right? This air pocket. And that can be done through additional capital if we need to do that. It can be done through bringing in outside consultants who can work pro bono or work for equity. Just that way you don't have to
help them go through that phase.
Help them go through that phase. And so the line that, again, Anand, my partner, uses is when there's a fire, we don't run away from it, we run towards it, right? So we want to make sure that we are the firefighters who are putting that fire out or helping the entrepreneurs put that fire out, rather than saying, you know what, it's one of the 30 companies we have, we let that one go, we focus on the other ones, right?
Right.
Now, when you're an early stage investor, perhaps that is the approach you need to take. Because
you probably don't have the bandwidth to help them.
Exactly. So you need to sort of focus on your winners, double and triple down, and let those go that are simply not going to move the needle. We have a different approach to investing, and because I said, we have a concentrated portfolio, so we want to make sure that every one of our companies succeeds. And thus far, knock on wood, we've had zero mortality. So none of our companies have gone sideways. So we'll see.
If I talk about pitching to a venture capital fund, which is becoming a big part of the businesses now because they need the capital to survive and also to thrive. Do you see any common mistakes entrepreneurs make when pitching?
Yes. So, okay. So this is a line that many may find somewhat disturbing, but I'm going to say it anyway. In the venture capital business or in the entrepreneurship business, okay, keep this line in mind. You can divorce your spouse, but you cannot divorce your investor, okay? So when that investor is on what's called your cap table, on your list of investors, you cannot kick them out. They are with you for, if you're a seed stage company, they could be with you for 10, 12 years, right? Or even a Series A investor could be with you for a long time. So choose wisely, almost more wisely than choosing your spouse.
Got it.
Because there's no exit path. Okay, this is a very sort of strange statement that I've made, but let that sink in and think about it clearly. The reason I'm saying this is just like the investors do their diligence before making an investment in a company. Similarly, the entrepreneurs should do diligence on the investors, making sure not just which firm they're dealing with, but the individual that they're speaking with or may have on their board of directors, right? So that chemistry,
needs to
that
work
alignment
both
of
ways.
purpose that has to be both ways.
Got it.
The other thing you have to keep in mind is know which stage you're in. For example, if you're a seed stage, if you're just getting going and approaching $1 billion fund makes absolutely no sense.
Got it.
Okay, because
Self-awareness there too.
that's
Yeah.
right. That's right. Self-awareness and really, I mean, what's amazing to me is there are networks now. There are networks, peer networks, some paid but mostly sort of pro bono that entrepreneurs should be able to and should tap into. There are enough people who are willing to give and give freely. These are successful entrepreneurs. These are investors. I spend my time just meeting entrepreneurs who are not
Looking for money necessarily,
exactly,
but just mentorship advice.
Absolutely. So whether and you know, there are groups within certain segments. There's a deep tech peer group. There's a SaaS group called SaaS Boomi. You can sort of tap into. There's a big annual conference happening next week in Santa Clara, for example, called TiCon. It's an annual, 50,000 people show up.
Got it.
Go to these events, network. That actually is it's a signal or a proxy to an investor saying, you know what, you wanted to reach out to Mohanjit, don't use a cold email. Now, in my case, I do read every email. I may not be able to respond to every email, but I do read it. But there's no substitute for a warm introduction. So as an entrepreneur, one of your first tests is, call it persistence, call it grit, call it just sheer hard work and connectivity. There are ways you can connect to people who are then connected, let's say, to me. It could be lawyers, it could be consultants.
So building a network is very key.
Absolutely. It's a signal to the investor that not only do you have the intention, you have the execution capability, starting first and foremost with reaching out to the right investor, right? So if you're a seed stage investor, reach out to a seed stage firm. They're going to write you the small checks that you're looking for. A $1 billion firm where the smallest check size may be $25 million, when you're only raising $1 million, makes no sense, right? And so don't spend your time. The other thing is you have to, I'm kind of preaching to the choir, the entrepreneurs know this, you have to have thick skin. Meaning, all you need is one yes. Okay, and I even tell entrepreneurs. I was having this conversation yesterday, as a matter of fact, and I said, look, you think raising money is hard for entrepreneurs? Okay, it takes 3, 4, 5, 6 months, etc.
Sure.
As a venture firm, as an investment firm, when Iron Pillar got going, we were a first-time team and obviously a first-time fund. It is incredibly difficult, if not impossible, to break into a very crowded space of venture capital and private equity as a first-time team and a first-time fund.
So even for you as a firm was hard to make it.
That's right.
And then imagine that for an entrepreneur.
Yeah. Almost took us a year and a half. It took us 18 months.
So persistence.
And again, having the self-awareness to say, okay, well, what is somebody saying and what are they intending? Because what they say and what they mean could be two different things. So that, for example, if I, for example, as Iron Pillar, I go out and talk to what's called a limited partner. These are institutional investors who are looking to invest in firms like ours, and they say no. We need to peel the onion to understand why they say no, right? And sometimes they'll say, we are, India is not really on our strategy roadmap. But then you find out, a month later that they've actually made an investment in India, right?
Oh, maybe it was another company,
another company, another manager, another. So what sometimes people say and what they mean are two different things, right? So. And the other thing, just at a tactical level, when you are in a meeting with an investor, you will know pretty much within the first 10 or 15 minutes if it's a lean forward experience or a lean back experience, right? What I mean by that is trust your gut to say, you know what, this individual is genuinely interested in what I'm doing. They're curious. They're asking probing questions rather than, checking their phones and being distracted and just so because time is the most precious commodity, right? there's opportunity cost to spending time with person X versus somebody else. And, leave every meeting with the next step. It's almost like a sales process, right? Every prospect, every investor that you're pitching to is a prospect. It's like sales prospecting, right? You're creating a funnel. And so when you leave a meeting with the next step. And if the next step is not happening after 2, 3, 4 follow-ups,
then
chances are they're not interested. Move on. Right?
Got it.
And we learned the hard way when we were doing the first, Fund 1 exercise. Now we've become not experts, but we've become much better at saying, okay, who is and who is not genuinely interested. And you can actually ask. Nobody's going to throw you out of their office for asking questions of them. Oftentimes, entrepreneurs say, you know what? I'm just going to wait for the VC to ask me questions. I'll just respond.
But it should be like
perfectly fine. It should be a conversation.
Got it.
Talk to them about what is your process like? What is your timeline like? Have you invested? Here's another one. Have you invested in a company like ours? Right? So investors...
That'll give you an idea.
Don't have... Well, two things. One, it'll give you an idea. Do they understand the subject matter? Do they understand the domain?
Right.
The second you'll find out is whether they have competing investments. So what's interesting is investors don't have the obligation of telling you, hey, you know what? We have another company that has 60%, 70% overlap with what you're doing. But if you ask them,
they might.
They should have the obligation to tell you the truth.
Right.
Now, ideally, you should have done the homework. You should have looked at their portfolio companies and understood, again, going back to self-awareness and preparation before you have the meeting with the investor. But if for some reason you've not done that, you've not had time, etc., ask the question. Have you invested in companies in our space or companies that may have some overlap with us? Now, if they're honest, they will tell you the truth. If they're dishonest, you probably basically
get a sense of...
you saved yourself the hassle. Bless you. You saved yourself the hassle of potentially dealing with somebody that shouldn't have been an investor in the first place, right?
Got it.
So yeah, these are some of the sort of I call the tactical and practical mechanisms that that entrepreneurs can use. But first and foremost, network, tap into your peer group, get mentors, get peer mentors, if you will. I am an open book. I spend probably 10 or 15% of my time meeting entrepreneurs just to give them feedback. I actually am Iron Pillar is actually a global firm. I am the only one in the U.S. In Silicon Valley, so I don't have an office. So my office, my wife doesn't like this about me, but my favorite place is a little hole in the wall, right? I'm not a fancy schmancy guy.
Got it.
And the hole in the wall is called Hobies. And basically, when I'm in town, usually on Fridays, I'll set aside a couple of hours. I'll have a corner table, and entrepreneurs can come and just pitch me for 30-minute slots.
Very
right?
nice.
And it actually, again, brings me joy. It actually keeps me grounded in terms of what the young entrepreneurs are thinking about, right? So it's almost market intelligence for me. Right. At the same time, if I can, open a door here, open a door there, it's not that much effort. And in many cases, opening that door means it gives me an opportunity to connect with somebody that I may not have connected with.
Right.
For, in many cases, years.
It shifts your perspective as well.
That's right.
So it's a learning experience for both sides.
Exactly. So receive by giving is the mantra that so I mean in Sikhi, for example, right? It's whether you call it seva or you call it even I tell my non-Sikh friends, and especially the Gora friends here, I said the word Sikh, if you just boil it down, means learning, right? We are disciples.
Learning.
Right? And so therefore I almost have a divine mandate as an investor to constantly learn. And how do I learn? I have the best job in the world. I have the experts who I meet day in, day out, who are teaching me something about their domain
that you might not have known,
which
or
I
have
will never be
with.
as deep in as they are, right? So think about that. And if I can just retain 10%, 15%, 20% of what they have shared with me,
That's
I'm
a
a
win.
better human being at the end of the day than I was at the beginning of the day, every day, right? There are very, very few professions where you can say that and actually mean it. So again, I am very, very blessed and just, very grateful to be doing what I'm doing.
No, that's beautiful. How do you feel about India? Are you optimistic about it?
The short answer is yes. I mean, I invest in India, so I'm very, very bullish when it comes to entrepreneurs and just the fact that they're thinking much, much, much bigger than they ever have in the past. So to give you an example, I mean, in 2007 when I moved to Bangalore, I write a lot, I speak, and I would go and to really try to evangelize, try to get entrepreneurs to think beyond 10, 15, 20 million in revenue. It was very, very hard. And then I realized, there's a reason why it's hard for them to think that big, because there weren't proof points. There weren't case studies, right? Flipkart hadn't happened. And so Flipkart was a watershed moment. Freshworks going public on NASDAQ was a watershed moment. And so now, of course, it's much, much, much different. It's no longer about, every one of our companies that we are investing in from our latest fund, they're no longer thinking about $1 billion in valuations, so-called unicorns. They're thinking about $1 billion in revenue. They're saying, we can conquer the world. We can. So what I'm finding now.
So there's more conviction?
There's a lot more conviction. There's a lot more conviction. And
it's also probably proof of concept, right? Like there's companies who've led the way and
that's right.
Paving the path for others.
That's right. See, I still remember seeing ads for grooms primarily, the parents of so-and-so seeking a groom, MNC preferred, right? That was the thing, like multinational corporation preferred. And then I suddenly started seeing
Startup
this change.
preferred.
Exactly. So
Startup wala guy chahiye.
Exactly. Because what happened? What ended up happening was suddenly there was wealth creation.
Yeah.
Options
Success
actually
stories,
meant something. A success begets success. That flywheel effect has started to take shape. And what's really compelling and interesting to me, for example, one of the sectors, we haven't invested in it yet, but because I'm a space and rocket science kind of a individual, space as a theme has really blossomed in India. You've got 3D printed rockets and ion propulsion engines and hyperspectral imagers, and these are all companies that are coming out of India. Think about what's special about India in that case. India has arguably the most successful space program in the world. Okay? We've had fewer failures than any other country, including the US. And you've got, women scientists in, what are they called? Kanjivaram saris, sitting in ISRO headquarters doing lunar missions and things of that nature. It's incredible. And so what's happening is you've got ISRO scientists who have 40 years of experience retiring and joining startups. They're working side by side with the IIT, Kanpur, Kharagpur, Madras, Delhi, Bombay guys and saying, we're going to do it better, faster, cheaper. So India, for example, in space has what I call 2 orders of magnitude advantage. They have an advantage in terms of time. They can do it faster. And in terms of cost, they can do it much cheaper. And so it's really incredible,
it's a win-win.
What's happening.
So they have the talent. They're more economical.
That's
if I
right.
Can say it.
That's right. Every dollar rupee lasts longer. They can do more with less, right? The whole concept of jugaad, you can take it as a double-edged sword, but I see it as a very positive. Is you are just resourceful. You just make do with what you have, and so we have companies. Interesting. There's a measure that we have within Iron Pillar, which I call the Mohanjit coefficient. Okay, Mohanjit coefficient. Mohanjit coefficient it's a fraction. The numerator is the revenue, annual revenue, right? How much is the company making? Denominator is how much money have you raised in venture capital and so on.
So it should be always higher?
It should be higher. It should be north of 1, ideally, which means that every dollar that has been invested in the company has generated more than $1 in annual revenue.
So that makes it even, and then it should be.
It should be much more than that. So we are now investing in companies that have 7 or 8x.
Wow.
So there's one company in particular, they've only raised 7 million total, and they're doing 45 million in
So you're quite
in annual
optimistic
revenue.
about companies
Again,
in India.
and all of these companies, as a techie, it's not a rinse and repeat of this worked in the US, we're repeating it. Obviously, that is happening as well, and there are companies doing well. But there are intellectual property, there's real tech, there are real patents that are now with every single one of our investee companies. So it's not just about execution, it's about IP and being truly different at a technology from a technology standpoint. And so if you can do that, if you can get global patents, you can then take that company, leverage the intellectual horsepower that sits in India,
borders and
but sell globally. That's right. And so again, every one of our companies is, they may do their initial product market fit, their initial scale might be in India, but then on the consumer side, they're thinking Southeast Asia, Middle East. On the enterprise software side, they're thinking Europe, they're thinking the US, and so on. So there are a lot more examples of those sort of success stories. The final piece I'll say, going back to my team piece, remember the 3 T's and the M, when I was investing, let's say between 2007 and 2012, especially 7, 8, 9, 10, there was no what I call bench strength, meaning that if startups were scaling, they couldn't tap into somebody else who had helped scale startups earlier because there weren't, experienced startup, let's say either founders or employees and so on and so forth. But over time, right, if you look at the backgrounds of...
We have that human power. Yeah.
These are folks who've spent time at Flipkart and Lenskart and Healthcart and all the carts and, Snapdeal, et cetera, which means that they've seen these journeys. Not that all these journeys have been successful. You can learn almost as much, if not more, through failures than through successes. But they've had that combination of success and failure, which they can then leverage in the newest avatar. Right? And that experience is priceless, which simply did not exist. So again, it took a little bit of, in engineering terms, called activation energy. It takes a little tika,
So we have to leverage this human capital.
Absolutely.
People who walked on these paths ahead of us, sort of trying to learn from them.
And they are willing. They are willing
to share this information.
Right. And so tap into these mentor networks. Reach out through warm introductions. Warm introductions is the way to do it. Cold emails do not work. Cold LinkedIn outreaches, maybe through some level of tukkebazi that it might work, but it's really not the way to do it. And so be methodical, be thoughtful. Heck, now there are all sorts of AI tools that you can leverage. Understand who you know within your LinkedIn network, who then is connected to the people that you want to reach out to. Tap into that.
Networking is key.
Networking is absolutely key. Yeah.
One last question.
Of course.
We're wrapping up here. If you would give one piece of advice to budding entrepreneurs, what would that be?
Like Phil Knight said, I guess just do it. But look, think big, be aspirational, yet be humble, right? And the way I would define it is the following. I have a 2x2 matrix in my home office, and I have the kids see it almost every single day. It has ignorance to knowledge on the x-axis, and humility to arrogance on the y-axis.
Wow.
So in my business, and some of my brethren may not like this particular bit, there are way too many people who are in that quadrant of ignorance and arrogance, right? Not knowing much, but they think they know it all, right? Try to be in the polar opposite quadrant, right? Be humble, but have that zest for knowledge. Know what you know,
but high knowledge.
That's right.
That's the quadrant you want to be.
That's the quadrant you want to be in, right? As long as you have that, and just like in my life, lightning tends to strike every now and then. I think good things will happen. And one final thing I'll say is, as I look at my life, I was telling you before we started that nothing in my life has been planned. It's been everything, including meeting my wife, were completely accidental. And so when I started thinking about it, a friend of mine said, there's this term called engineering serendipity. I mean, in India, you'd call it create your own karma, right? But how do you create your own karma? How do you engineer serendipity? For me, it comes down to two things. One, you surround yourself with brilliant people as often as possible. When I say brilliant, it's just not brilliant in the mind, but brilliant in the heart. And you give unconditionally. When you can help, help. And if you do those two things, good things will happen. How, when, where, I can't predict, but things will happen when you least expect them. Positive things will happen when you least expect them. So that's my final sort of parting words.
That's beautiful. Thank you so much. I was hoping we could keep going, but we're short on time, so we'll end it right here. Thank you so much for sharing your professional journey, your learnings, and your 2 cents to the entrepreneurs. Thank you so much. I appreciate you coming
My
here
pleasure.
today.
No, this was brilliant. Thank you.
Thank you.